what can one do to best ensure that, one, your legacy continues on, that it is not squandered, and two, that the gifts you leave to your heirs or to those whom you love are best utilized or maximized? People, the very simple answer is a living trust. In addition to a living trust, the very simple answer is education. One, we have to begin educating ourselves, and we have to educate those around us. We must begin educating our children. Now, we all know, despite our best efforts to educate our children, they're still children, and even adults are childlike as it relates to their finances. So a living trust will assist you in making certain that your goals are most likely to be accomplished after your passing financially. How so? With a living trust, you can do what is called manage beyond the grave. That is, rather than have your 25-year-old daughter receive $200,000 in proceeds from your life insurance policy, the $200,000 in life insurance proceeds will be transferred to your family trust or to your living trust for the benefit of your child or your children. So you are not handing your children a check. You're not handing your children hundreds of thousands of dollars. You're not transferring a house or homes or investment property to your children or your other loved ones because they may not be financially astute enough to manage those assets. A living trust is like a corporation, akin to a corporation for your assets. Again, as an example, the monies from your life insurance policy will be transferred to your living trust. So rather than having your daughter named as the beneficiary on those life insurance policies, you change the beneficiary designation to the name of your trust. You name a trustee to manage the assets on behalf of your daughter. You provide specific stipulations as it relates to the distributions to be made to your child or children. As an example, you can say, rather than hand my daughter $200,000, as would be the case if she's listed as beneficiary on your life insurance policy, you say, pay my daughter $1,000 a month to supplement her income. In addition, as an example, in addition to the $1,000 a month that you will pay to my daughter, also provide to her as much money as is necessary for her education, for her well-being, and for her health. So if there's an emergency that occurs with respect to your child's well-being or health, the trustee has the authority to distribute more than $1,000 a month. If your daughter seeks to advance her education, the trustee has the authority pursuant to the trust agreement to distribute more than $1,000 per month to your daughter. In addition to that, there'll be a clause in the trust agreement specifically related to any real estate or to your primary residence. This provision of the trust agreement will say, of the $200,000 that was transferred or funded in the trust upon my passing from my life insurance proceeds, I would like $50,000 of the $200,000 to be reserved for the expenses, the maintenance, and the costs related to ABC 123 property. So then you can set aside a certain amount of monies, you can earmark a certain amount of monies to cover the expenses and the costs of maintaining the property. That will give your daughter a certain period of time to have a roof over her head without worrying about coming up with the money to completely maintain it. So you can say, well, the cost of maintaining my home, at this time is $5,000 a year or $10,000 a year. So I'm going to give my daughter 5 years of maintenance and costs to get her on her feet. If after the 5-year period or otherwise the $50,000 runs out, you can write this into the trust agreement. Then after the 5 years, If my daughter is still not financially able to maintain the property, then the trustee is instructed to sell the property and distribute the proceeds into my children's separate trust. So the proceeds from the sale of the property will go back into the trust. And then the terms of the trust provision called the children's separate trust provision, which called for your daughter to receive $1,000 a month and distributions of additional sums in the event she needed it for her health or well-being or education. That's an example of how a living trust works. Everyone needs a living trust, especially if you have children. Or if you have loved ones who are spendthrift. You can be married and you still need to set up this provision because maybe your spouse is not that good with money and you want to make best certain that the money lasts your spouse over an extended period of time. You at least want to make certain that whatever you leave to your children extends over a 5 to 10 year period if there's enough assets in that trust. There's also a provision in the trust that says if the corpus or the assets in the trust fall below a certain level. So when the money's in the trust or the assets in the trust, if the value falls below, let's say $50,000, the trustee has the ability to go ahead and distribute all of the assets of the trust and go ahead and close the trust out. So there is some flexibility in the trust. People know that in order for us to build a strong economic foundation in our community, we must begin to utilize 2016, 21st century technology. I say all the time to my clients who come into my office, right? I say a will is akin to a payphone. Nothing wrong with the payphone. You can make calls on a payphone. But who wants to walk 2 blocks to find a payphone and dig in their pockets in the sub-zero temperatures to make a call? When there's something called a home phone. A home phone is a step up in terms of technology than a payphone. So if given a choice between a payphone and a home phone, I think most of us would choose the home phone. A will is akin to a payphone. A land trust is akin to a home phone. And a living trust is akin to a smartphone. You can take a smartphone on a plane. You can take a smartphone overseas. I am videoing myself right now on a smartphone. You can record yourself on a smartphone. You can bank on a smartphone. You can take photos on a smartphone. A living trust is a smartphone. Let's get smart, people.